And as you know, we're used to volatility in our portfolios. So after the election, or since the election, we did, all told, net, sell nearly $500 million of Tesla, expecting some other reason for volatility. So we try to use the volatility to our advantage. And of course, as Tesla was taking off after the election, there were other stocks that were not. And so we recycled and so forth.
Hey guys, welcome to Everyday Finance.
Most people still don't know what happened.
While new tariff threats shook markets around the world and the Dow fell more than 250 points, a huge event was happening below the surface.
Traditional industries
slowed down, but new ideas sped up. Nvidia just became the first company to be worth $4 trillion, which is a huge amount of money. At the same time, Bitcoin hit a new all-time high of $118,000. Just what Cathie has been saying would happen. A change where new technologies like AI, crypto, and next-generation tech become the new safe havens. As the cost of developing AI goes down and more companies start to use it, companies that were skeptical at first are now rushing to join. Cathie says, we're just at the start of a much bigger change in which new digital and financial technologies will replace the old system. AI is coming up fast, but Bitcoin is still ahead. A lot of people won't notice this change until it's too late. Cathie Wood breaks down exactly what's going to happen next and why it could be the best chance of this decade at the end.
Well, that big, beautiful bill is causing a bit of a ruckus out there, as I'm sure you all know, with President Trump and Elon Musk having different points of views. I think the way this is evolving is Elon, Tesla, and investors are beginning to understand more and more just how much the government has control here. SpaceX has $22 billion in contracts, government contracts. Regulation will impact the transportation sector. We are hoping that the regulation for autonomous taxi platforms turns into federal regulation as opposed to state by state, which would accelerate the rollout of autonomous. And of course, Neuralink is subject to FDA regulation as well. So there's Elon is involved in companies that are depending on the government. And I think his beginning to dial it back by first deciding to decommission the Dragon spacecraft, which brought the 2 astronauts back from the space station, and then basically saying, no, that's probably a bad idea. I think we're beginning to walk this back. Now, one of the hypotheses out there is that what has happened was partly, not entirely, orchestrated. Clearly, there has been some brand damage to Tesla, which he readily admits. And I think he's trying to disengage from the government and being associated with one party or the other. There could be another interesting, I guess you'd put it in the 5D conspiracy theory, and that is that President Trump is negotiating in a very tough way with China. And of course, China is a big part of Tesla's business, both production and consumption. And so he certainly doesn't want to be impaired there. And of course, the big negotiation is around rare earth materials. And so it is interesting that today, that China, through Reuters, I believe, announced that it was going to release rare earth materials or open back up the trade with the big three Detroit automakers. Now, that doesn't include Tesla, but this is a beginning. So that's very interesting as well. So we think there's more that meets the eye here, but nonetheless, and it did get out of control, clearly, I think. And I have been asked during Brainstorm today, if I were on the board of Tesla, how would I respond to this? And one of the things I've observed is over the years since we've held Tesla is that Elon Musk works really well under pressure, and he creates a lot of that chaos and pressure himself. So I think part of what's going on right now as well is his confidence in the robotaxi rollout is increasing, and he does expect that it's going to be successful, dependent on regulation, of course, for how quickly this success will come. And I think I would be advising the chair of the board and others just to encourage him to get back to the future, back to really changing the way the world's going to work. And he did say that that's what he believed his role is, to accelerate growth and help get us out of this deficit through growth, deficit as a percent of GDP coming down. As growth in the global economy, and especially in the U.S. economy, accelerates in response to these massive new technology opportunities. I also, as an investor, we have to evaluate this situation in the context of the 6 metrics around which we have centered our bottom-up analysis and evaluation. Of those 6 metrics, thesis risk probably increased, having to do with regulation, as I just mentioned. So we will see how much both President Trump and Elon Musk dial back what happened, the drama yesterday, and see how much thesis risk has gone up here. The one thing we do know is that both of these individuals want to change the course of history in many ways. President Trump wants to be the greatest president ever. Well, that's not going to happen if he's bogged down in one fight after another. He needs to get the tariff fight behind him, and he definitely does not need another fight on his hands. And of course, Elon Musk wants to get to Mars and transform the universe, shall I say. And he doesn't need to get bogged down either. So we do think they will, at the end of the day, listen to that kind of reason. And as you know, we're used to volatility in our portfolios. So after the election, or since the election, we did, all told, net, sell nearly $500 million of Tesla, expecting some other reason for volatility. So we try to use the volatility to our advantage. And of course, as Tesla was taking off after the election, there were other stocks that were not. And so we recycled and so forth.
Ideas aren't as new as they used to be. A long time ago, during the dot-com era, investors poured money into ideas that weren't ready yet. Technology was expensive, unreliable, and often made false promises. Things are different now, though. AI is changing in a way that we can use. The cloud is strong, the tools are less expensive, and businesses can train strong models without spending a lot of money. This change can be seen in Bitcoin's history. It was once thought to be a risky bet for tech geeks, but now it's breaking. Records and investors from around the world are paying attention. As costs go up and profit margins get smaller, AI helps businesses stay efficient. At the same time, Bitcoin is becoming a serious hedge against financial instability. Ease Bets are no longer just for fun. They're becoming necessary tools for people to get by in the new economy.
Just to finish off the scoring system, in terms of people, management, and culture, some might question, should our score there go down? Well, as I just mentioned, we've lived with Elon and through many cycles, and we are used to this. As you will remember, the SEC did come after him. That was the one time we dropped the score because that was going to be a huge distraction for everyone. The board, employees, Elon Musk himself, the management team. And we pretty much have left the score there for this kind of reason. The second is execution. I think the robotaxi is our big focus here. June 12th is the day. So let's see how that goes and how we change that score over time. The other is product and service leadership. That one has come down as Tesla has lost some EV share because of all of the drama. And we are betting that the news cycle is going to change here and move towards robotaxis to change that score and move it back up. And moats and barriers to entry. This is where it's going to be very hard to beat Tesla at robotaxis and at humanoid robots. And that's becoming a bigger part of the story than even we had been modeling in. So stay tuned for that. And as I mentioned, dialing down exposure as the stock soared is part of active management in the ETF wrapper, which before we really happened upon the scene in 2014 wasn't even a thing. Most of the ETF world was passive. But now, as I'm sure you all know, a lot of other management teams are moving towards the ETF wrapper as well. So just felt we should explain a little bit, given all of the drama out there and how much Tesla's stock price did drop yesterday on Thursday, the day before Employment Friday. It's rebounding nicely now, and so let's see what happens here.
So do you think it's going to work out?
I do.
You do?
And I think the stock market is beginning to smell it.
If I just had to invest in one stock right now, what stock would you recommend I invested in?
Okay, well, I have to give you
your portfolio.
Top pick.
So it would be Tesla.
It would be Tesla if I had to give you one stock.
Okay, interesting.
Because think about it. It is a convergence among three of our major platforms. So robots, energy storage, AI. And it's not stopping with robotaxis. There's a story beyond that with humanoid robots. And our $2,600 number has nothing for humanoid robots. We just thought it'd be an investment period, and but I think he's going to start generating not only productivity gains internally, but revenues from humanoid robots. I am such an optimist. I really do have to dig down deeply. If you had asked me this a few weeks ago, I would have said, this tariff situation is going to blow the global economy up if we're not careful. So I'm much more settled about that right now. I'd have to say I am concerned that there are going to be people caught out by these new technologies and for whatever reason not willing to adapt, because there are going to be huge opportunities if they do. And so one of the reasons we give away our research, I'm very honored to do a podcast like this, is to get that word out. There is so much information available. You can just go to our site and listen to our podcasts. And if anything inspires you, go for it, because the opportunities are going to be enormous.
When you say you're concerned people might get caught out
in, disrupted industries. I mean, we think the whole transportation industry is going to be disrupted. We think retail as we know it's going to be disrupted as we
Retail is in like shops and stuff and...
Yes, although if they adapt with more social, personal experiences, I think that anything physical, you'll want to have a social dynamic associated with it. But in terms of what I think is going to happen to retail is we're going to have our personal shopping assistants, and they're going to anticipate what we want, which I can't wait. I hate shopping. Anticipate what we want, or basically flag something that they know we would like if we knew it were available. And they'll be disintermediating all of the traditional sources because they can go anywhere in the world. So just think about almost every sector is going to be disrupted. Healthcare is going to be disrupted enormously, I think, for the better. But those who are wedded to doing things the old way are probably going to be disrupted,
Some analysts think that Bitcoin could be about to make a huge jump, which could be historic. Bitcoin's price went up 10% in July and hit a new all-time high of $118,600. It now looks like it's ready for a parabolic move. With price targets of $200,000 to $300,000 by the end of the year, one analyst, a PSK32, thinks Bitcoin is still following its long-term power law curve. This is a model that shows Bitcoin's exponential growth over time and predicts big jumps when the price goes faster than the curve. This model doesn't just keep track of the price in dollars. It also uses a special method called power law time contours to see how far Bitcoin has moved from its long-term trend. Bitcoin is being helped by a number of large-scale forces right now. More and more people think that the Federal Reserve might start lowering interest rates, which would make the US dollar weaker. That's when risky assets usually go up, and Bitcoin is now seen as a top choice, so a lot of money is pouring into it. Find 70% of the money that used to go into gold has already flowed into Bitcoin ETFs. This shows that investors are shifting their trust to digital assets as new safe havens. Long as these trends continue and the power law model holds true, Bitcoin's next leg could take it well above its previous highs.